Hello traders, today is the 27th of February 2013 and the time in London is 11:43. In New York is 6:43 a.m. Happy trading to you all. The title of this video is Moody Kangaroo Trading. In this video we'll discuss market principle, what I like to call market stable data. At the end of this video, one will understand how to make excellent investment decision, how to make excellent trading decision. If you want to achieve consistent winning trade, we must give priority to market principle, market stable data. All right, very, very important. The first market principle that we're going to discuss is that the market is global. Okay, if one part of the world is in a recession, especially, for instance, the United States was in recession, there's a high chance that the euro, we may have a negative effect in the eurozone, in Japan, in China. On the other hand, if you have a excellent economic condition in China, that may have a positive effect on the eurozone and so on. All markets are interlinked and the market is global. It's a market stable data. Very, very important. All right, very, very important. Now the next thing that we want to talk about is Moody, which is a rating agency that is has downgraded the economy of the United Kingdom on Friday 22nd of February 2013. That's why we give the title Moody Kangaroo Trading. All right, on this yearly chart, the green line here, that's what we call the smart high. The blue line here, that's what we call the smart low. The pink line here, that's what we call the smart media line. The smart media line is the most influential critical price level. United States went into recession because of the weakness of the economy and also the sovereign debt of United States. All right, the same thing, we have huge sovereign debt in the eurozone, huge sovereign debt. United Kingdom, in London, in Great Britain right here, and all over the world, in Japan, you are talking about sovereign debt, the debt of a nation, all right? And credit rating agency were busy downgrading, many countries, all right? France was downgraded, the credit rating of France was downgraded, the credit rating of United States was downgraded, the eurozone, the credit rating was downgraded, same thing for Italy, for Spain, and now on Friday 22nd of February 2013, United Kingdom was downgraded. I think it was a mistake. Not a mistake in the proper sense of the word, mistake relating to the timing of the downgrade. The time that Moody has chosen to downgrade the United Kingdom economy was perfectly wrong, because it should have done it long time ago. This is the time normally that traders should look for opportunity, or investors should look for opportunity to buy the pound instead of selling the pound. And out of the blue, the Moody rating agency has downgraded the economy. The good thing about the YouTube is that we are allowed to speak our mind, to say what we think. Though we are just small players in the market, we can say what we think, all right? As a trader or an investor, according to the market principle, all market participants are important. The Fed is a very important market player. Central banks are very important market players. Credit rating agencies are important market players. Hedge funds are very, very important market players. Market makers are important market players. Liquidity traders, momentum traders, technical traders, fundamental traders, ordinary traders, useless traders, crazy stochastic traders. It doesn't matter what sort of traders or investors they are, long-term investor, short-term investor, medium-term investor. These are all market participants. And Moody is also a market participant. All market participants are paying attention to the big players, which are the Feds, the central bank, and the rating agency. And as a rating agency like Moody has downgraded the pound, the economy, the United Kingdom economy on Friday 22nd of February 2013. This is a major event. All market participants will pay attention to this important news. Talking about Moody Kangaroo Trading, we are talking about distortion of the market. In my view, this was a distortion on Friday because, in my view, Moody was late to downgrade the economy in United Kingdom. Living in London, I can tell you for sure, ladies and gentlemen, that the economy in United Kingdom is a very, very resilient economy. In fact, many rating agencies were very, very careful to downgrade the economy of United Kingdom. It's not because they cannot downgrade it, because they know that the economy is very, very resilient. This is an economy where everything is all open. It's a free market in the proper sense of the word, free market. And it's a country where people can open business easily like this. People can close business easily like this. People can hire easily like this. People can create jobs easily like this. People can fire their employees easily anytime. It's a very, very open and dynamic market. That's why many rating agencies were very, very careful not to downgrade quickly, okay, the United Kingdom economy. But in fact, Moody has done it last Friday. But in my view, the timing of the downgrade is completely wrong. It should have done it, okay, earlier. In fact, Moody has put the United economy on negative outlook, telling investors to be careful that the economy is slowing down, that okay, the creditworthiness of this country is no more as strong as it was before. So this is the process. The country will be placed first on negative outlook, which it did, but it was not strong or courageous enough to downgrade, okay, the United Kingdom economy straight away, which was in fact last year, 2012, was the right time, in fact, to downgrade the pound. But the market itself has downgraded the economy of United Kingdom. You can see that if you look on this yearly chart, look, this is the year 2008. The pound went down big time, went to the what we call the smart low. In fact, you hear the level of 13516. The smart investors are not stupid. They knew that there are decisions need to be made, and the economy of United Kingdom is resilient. But every part of the world, talking about the market principle, that the market is global. Okay, Japan went into recession, then United Kingdom, then United States went into recession, and then United Kingdom also went into recession. People were first because there was a recession in United States. People were selling the dollar, bringing liquidity to the Eurozone, so people moving their money out of the dollar into the euro. And then finally people realized that in fact the market was global, that there is no hiding place, in fact. So people move their money out of the euro now. People are buying, okay, the dollar. It was last year only people were selling the dollar like mad, okay, sellers or mad bear, so to speak. No one want to touch the dollar. But here we are again, people are buying the dollar big time because it's just about fear. People fleeing away from Japan into the Eurozone. You're fleeing away from the Eurozone into, okay, United States, and so on. All we need to do is to acknowledge the cycle, market cycles. There are cycle of a down move, cycle of an up move, and there is a transition period. It's all the time what's happening. Investor, if you want to buy and hold for a long time, you must buy and hold at the beginning of a bullish cycle with a strong fundamental. This is just what we call market stability. The strategy that we want to apply must align with the market cycle itself. Okay, applying those principles, applying those strategies with the market principle. The market is global. So, talking about the market being global, okay, Japan went into recession, okay, for more than 10 years or more. United States is now in recession, but things are picking up a bit, all right? There are still more to do. Talking about sovereign debt, Japan has, okay, a huge debt, and same thing for United Kingdom. And the debt level for all countries is very high, same thing for Italy, Spain, and the whole world is in a credit crunch cycle. But we are not at the beginning of the credit crunch cycle. We are coming slowly but gradually, okay, to the midpoint of that cycle. All right, so that's why I'm saying to you that Moody, though it's a very respected rating agency, has been completely out of order to downgrade the economy of that kingdom at the wrong time. Let me explain myself to you, ladies and gentlemen. Thanks to you too, I can express my view here, all right, to traders, to investors, so they may know exactly what is taking place. Look at where the pound is. The pound went down big time to the level of what we call the smart low. And then you see here the price went back above the smart median line, which is the pink line here, the most influential critical price level. In fact, the smart median line is the technical fair value of a financial instrument. And the price was rejected above the smart median line, was dipping above below it. If we go now, ladies and gentlemen, to the I'll go to the monthly chart. And I want you to keep your eyes on the price, because what the price doing, the price summarizing the activity of all market participants, either fundamental traders, technical traders, long-term traders, short-term traders. The price does not hide anything. This is also a market, a stable data. Drawing lines on this chart, we can see clearly that the price went down big time, and then there was this a higher low here, followed by another higher low. The price was stabilizing above the smart median line. Last Friday, the price returned back below the smart median line right here. Okay, so in fact, here in 2008, the market acknowledged that yes, things are not right. Price was trying to go down for the second time, was rejected here, which means the sentiment has changed. That's why the downgrade of the UK economy was too late. Talking about the Standard & Poor, another rating agency, who recently has downgraded Italy and all this European zone, it was excellent. Why? In fact, we tweeted about this. It was at the right time. It was a time when people were buying the euro like a mad buyer, so to speak, okay? All right? People were buying the euro. They shouldn't buy the euro that time. If I show you the chart of the euro USD that time, we were telling traders that the euro should go into the zone of 12000. But the market, for one reason, because they were running away from the United States, they were running away from the dollar. You understand? It's normal. Nothing wrong with that. People were putting their money into the euro. And the Standard & Poor has done an excellent job talking about the timing of the decision. This is critical. Critical. Because these market participants can change the dynamics of the market, as you have seen recently. And I can be perfectly wrong, but we will see whether I'm completely wrong or not. And this is the Euro USD, and during that time in 2000, you can see here, this is in 2011, and then people were buying the Euro. They shouldn't, that time, they shouldn't buy beyond this point. And we were telling that the Euro should return to the level here, which is the level here. You can see here, yeah, 1200. That's why it touches here. Look, exactly on the dot. And the Standard & Poor has done an excellent job talking about the timing of the decision. And the euro now was oversold. In our view, it's done. Talking about euro returning back to this level is a bit challenging, but it's done now. Talking about the pound, at the same time, look at the pound dollar currency pair. Okay, it's not because I live in London or I receive any payment from the politician to do this video. It's just because the price of the #1 indicator, talking about the timing of the decision, it was completely, okay, out of place, so to speak. All right, I have a great respect for rating agency. I think they are very, very important, though sometimes politicians try to fight this rating agency. I think they are very important to harmonize, so to speak, the market, the activity in the market. But they must, these are experts, they should be able to come in the market at the right time without creating too much distortion. That's why I call this video Moody Kangaroo trading. Okay, because the timing of this decision to downgrade the UK economy was completely wrong. That's my personal view. I can be perfectly wrong, but right here again, as I explain to traders all the time, we are ahead of the market, and very often we say something, and you will see it, okay, slowly but gradually it will take place, because we do not try to invent anything, we do not try to impose our expectation on the market, but we keep our eyes on the price, try to understand the message. What do we see on this chart? We see on this chart that the pound has been downgraded long time, and the market is satisfied with the downgrade already. So it's pointless at this stage, when the market was in fact looking for opportunity to buy the pound, Moody was not in a mood, so to speak, and came out in a Moody mood, okay, to downgrade the UK economy. Talking about Moody Kangaroo trading, what the message here is to focus on the market principle, because the market principle will not fool traders. Japan went to recession for a long time. It's done. It's finished. The Japanese economy, another thing that I need to say to traders, the Japanese government was too late, okay, to devalue the yen. The question I asked, what were they waiting for all this time when United States was busy, okay, devaluing the dollar? They didn't do anything. In fact, what we have seen, if I show you here for the USD yen, okay, it was some decision out of the blue. They will come and they will sell the yen, and the market will quickly buy the yen. It was not consistent, it was not efficient, and it created too much distortion in the market. You may say to me, George, who are you to say all this? Yeah, because I'm also ordinary market participant, and this decision will affect, of course, okay, my outcome. Okay, so look, let's bring it now. You can see here on this chart. Which chart? Hold on, please. There were too many distortions. This is the USD yen, okay? Talking about the decision that the Japanese government has made. Now, I'm not here to criticize governments, all right? So don't think that I'm on a mission, okay, to fight government, all right? But there were some decisions that were out of order, and every time people were selling the USD yen, and the Japanese government will come out of the blue, and then they will just sell the yen. By selling the yen, the USD yen, okay, will go up. And then the price will go up a bit, and then people will sell it again. And then they will wait a bit, and they will come back again. One morning, especially on Sunday like this, they will come again and sell the yen. And you see the next morning, Monday, and the USD yen will go up. And it was a wrong time, and the market was just selling. Each time they try to sell the yen, people will come and buy the USD yen. It was not right. It was messy. All right. Now, everything is finished now. If you see on this chart, the price did not hide it. Ladies and gentlemen, keep eyes on the price, keep eye on the market principle, and you will be on the right side of the market. We are out of the bearish trend line, which means the sentiment has changed clearly. You can see here, this is the first Elliott wave that some traders are calling the third Elliott wave. I disagree completely. This is the first Elliott wave. And everything has been. Recently, the Japanese government came out of the blue, said that we want to sell the yen. In fact, what we want, guys, and they said to the market, which you see the G20 last time, they rebuked the Japanese government indirectly, telling them that your decisions to sell the yen and to tell the market that, in fact, you want, okay, the exchange rate between the US dollar and the yen to go up to 100. That's why the market was pushing it near their target zone, which they say in public, but they say also that they are young government, so they shouldn't. So, all right, the experience, okay, politicians were telling them, guys, we understand that you want to do it, but you shouldn't tell the market. In fact, we want it, okay, the USD yen to come to 100 level. You see? So there were this decision last, okay, week or so, talking about the G20, and finally, okay, you see, the hedge funds that were say, okay, guys, is that what you want? We will help you do it. And they were pushing it up, okay? So now they start taking a bit of profit because the G20 said, we don't like that. If you want to get into currency war, we are ready for it. So they tone it down, so to speak. But again, the point of this video, we're talking about Moody kangaroo trading, okay? Ladies and gentlemen, we want to talk about the timing, especially the leading market participant, talking about the Fed, talking about central bank, talking about rating agency. We want them to get their timing right. For the Japanese here, what do I say to these people? I say to them, I say, if you want people to sell the yen, just allow the market to do it. The market will be happy to sell it. Why? When the market sees a sell signal, the market will sell big time. Use Elliott wave principle, all right? Use technical advisors to give you the guidance. When you tell them to sell the right time, in fact, if the market is ready to sell, and you tell them, guys, we are willing to sell, the market will rejoice because they are already in position to sell, and they will sell big time. But if the market is prepared to buy, and you keep telling the market to sell, you're not going to win because at the end, the market will always win. All right, the market will always win. This is what I call the divine nature of this messy market. Though everything looks a bit messy, ups and down, there's something that I don't understand, which, okay, a lot of traders are aware of, a lot of investors are aware of, is that the market rectifies itself. all the time. It does not matter whether people are trying to do their own thing or defend their interest. There's nothing wrong with that. To defend your interest, to protect your interest, very important. But you want to do it. You want to do it at the right time. Talking about Moody kangaroo trading, in my view, there is a distortion again here. As always, what we will do or what we will tell traders is to highlight the distortion and to know that there was a distortion at this point. That's my view. That there is a high chance that the market will rectify this distortion here. Talking about the Moody kangaroo trading, we are talking about the Moody rating agency that has recently downgraded the pound. In fact, these are smart people. They know what they are doing because, to tell the truth, listening to my heart, so to speak, they knew that they should downgrade the UK economy. But there was this, the Olympic 2012 in London. They were expecting that the Olympic will boost the UK economy, and the UK economy will defy again all the general, expectation. So they did not want to downgrade the UK economy during that time because of, the Olympics. Now the Olympics is over, and they are still accessing everything, and they noticed that the economy, is still struggling. The government here in United Kingdom was busy cutting big time, ladies and gentlemen, cutting, costs, reducing debt big time. I mean, no other country is doing it, at these levels, The UK economy was the first to quickly start the quantitative easing, all right? They were printing the pound non-stop, and they were doing everything, to fix the economy. This is what I'm talking about. Talking about the UK economy being very resilient, and they are not afraid to make tough decisions. Another thing that I need to tell today, the British, do not complain quickly. The one thing you have to understand, the British do not complain quickly, which make it easier for the government to make tough decisions. In other countries, when you see people going on the street, demonstrating, doing all sorts of things, in UK, before you see people on the street, you know that it's very, very serious. What's happening now, ladies and gentlemen, looking at the pound-dollar currency pair is not because I'm in a bad mood, I think it's very important for traders to understand what is taking place in the market. The market is global. Every decision in the United States will affect the economy in the United Kingdom, in Eurozone, as we have seen recently. People were saying that there is no problem. There is no credit crunch in the Eurozone. There is no real estate problem in the Eurozone. Who told you that? And the people were disappointed at the end because they forget that the market is global and no one can escape it. There's nothing we can do about it, only to take advantage of it or make excellent decisions. If you want to remain in the market for a long time, you may make a lot of money today, you will make a lot of profit. But talking about the long term, those who remain in the market for a long time, you want to work with the market principle, work with the market cycle, and keep your eyes on the price. Understand that the chart is the summary of all activity in the market. What you see here is whether people are using any kind of indicator, any trading strategy, any investment decision, is all right here in front of us. Going now to the short term, ladies and gentlemen, enough of my blah, blah, blah. Let's continue. I hope you like the video. If you want to make your comment below. If you are TST trader, you may contact me directly and ask questions, and I will be happy, to respond to you. On this daily chart, ladies and gentlemen, let's start drawing lines here without fooling ourselves. This is the pink line here. You see the small median line for the pound-dollar currency pair. In fact, this is what we call the root small median. This is the first, critical price level, the first small median line at the beginning of a new year. Look what the price was doing. This is 2012, by the way. But look here, and recently this year, the pound came down to this level. Yes, it's normal for the pound at the beginning of the year to, see this is double top here, to come near the small median line. This is what I'm saying to you. In fact, it will be better for the Moody, talking about Moody kangaroo trading, ladies and gentlemen, it will be better for Moody to downgrade the pound here. Let's show you here, right here. That will be a better place to downgrade the UK economy. Yes, the market will applaud it and say, yes, you guys, you are smart. You can make excellent decisions. And they will be happy to sell it down to this level. But now that the market has done the job, finished, Moody came out and said, well, UK economy, we were expecting you, now we're going to downgrade it. It was too late. I hope you have enjoyed this video about the Moody kangaroo trading that you will put into use, to make excellent decisions. To summarize this video, to make a successful investment, one must pay attention to the market cycle and the fundamental. One must also understand that the market is global. United States went into recession, Great Britain went into recession, the Eurozone is now in recession. What I told traders before, that the Eurozone recession will be mild, well, as we have seen it now, it's going to be mild recession. But now and again, people before were putting their money in China. There will be a kind of a recession in China also. It's nothing to do about people are bearish or people are bullish. It's about a market cycle, and there is nothing we can do about it. Until the next time, enjoy yourself and be very happy. We are the TSTW S008 traders. Speak to you soon.